Internal Revenue Service IRS tax news. Deadline for estimated tax payments postponed until Wednesday, July 15th. COVID Tax Tip 2020-79, July 2nd, 2020. As part of its response to the COVID-19, the IRS has postponed several tax deadlines until Wednesday, July 15th, 2020. So that's coming up Wednesday, July 15th, 2020. These postponements, and there's a link to the postponements here so you can get some more detail on it, generally apply to all taxpayers with a filing or payment deadline between April 1st and July 15th, 2020. So in this year, April 1st to July 15th, if you had any filing deadlines or payment deadlines within that time period, they most likely got pushed out to be due for July 15th. And that includes some of the two main components here being the individual tax return for 2019, which is usually filed by April 2020, which then got pushed out till now, July 15th, 2020. So that's going to be one of the major filing deadlines. And then the estimated tax payments for 2020, this would typically apply if you are a sole proprietorship, have your own business as opposed to a W-2 employee. In other words, the tax year 2020, which will be filed typically by April 15th, 2021, unless they push out the deadline on that, you still have to pay within 2020. If you're a W-2 employee, it's taken out directly from your wages, and so you should be okay there. You should be making your payment. But if you're a business, you have to pay quarterly, typically, and actually pay the IRS quarterly, and they postponed the quarterly payments for the as the year has been going here until July 15th. So no quarterly payments were really due until basically July 15th. Now they're all going to be due because they didn't remove the payments. They just postponed them. So all the payments are now due on the July 15th. All right, back to the text. This relief includes individual and corporate quarterly estimated tax payments. There's a link to the estimated tax payments here. Any taxpayer making payments received by July 15th, 2020 will not be charged late filing, late payment, or interest fees. And that's, of course, the point here is that you still owe the tax no matter what, right? I mean, you might say, well, why would I? It doesn't really matter if I don't file the estimated tax payments. I'll pay them later, when I file the return. But if you do that, then the IRS is going to say you didn't pay us when we wanted you to, that you didn't pay us during the year. Therefore, you're going to have a late fees. You're going to have late fees, late filing fees, late payment fees, and then we'll charge you interest on not paying us, because you owed it to us when we told you that you owed us the taxes and now it was late. So we're going to charge interest on it as well. So the point, of course, of making the estimated payments is to avoid the penalties and interest. Now, if you can't make the payments, you want to make as high the payment as you can that goes towards the tax so that you can avoid at least the late filing penalties, and you can pay and you can decrease the penalties and interest as much as possible by doing so, and then possibly put together an installment plan or payment plan if necessary so that you're in good standing with the IRS. And again, the major purpose, the major reason for that is to avoid the penalties and interest. And also, if you have outstanding tax debt that is due, you want to avoid any further collection action basically by the IRS as well, by basically just making sure you're in good standing, in good faith standing, even if you can't pay all the tax at a particular point in time. Back to the text. What taxpayers need to know. The due date for filing estimated tax forms and paying estimated taxes has been automatically postponed to July 15th, 2020. So that means 2019 tax returns usually due on April 15th, 2020 got postponed, even if you're not on extension, to July 15th, 2020. So if you haven't filed your 2019 tax return, that's okay. Typically, you're not late at this point in time, and that's good news. You're not going to have the late payment penalties, if you file by the July 15th, 2020. Now, if you're not ready, if you don't have all the taxes, if you're saying, hey, I'm going to owe money, and that's not worth me doing it because I can't pay right now, you still want to file the tax return typically because you want to make sure that you avoid the penalties for the late filing. Pay as much as you can to avoid any further penalties and interest on the amount that is due, and then possibly set up an installment agreement to be in good faith standing with the IRS and just say, hey, look, I'm setting up a loan basically, and paying it in accordance with the loan agreement, as opposed to letting it lie, not filing anything, and then the IRS coming to you at some point in the future, possibly, giving you some scary notice with possible collection action and whatnot attached to it. So back to the text. Taxpayers who still owe 2019 income tax as well as estimated tax for 2020 must make two separate payments on or by July 15, 2020, one for their 2019 income tax owed and one for their 2020 estimated tax payments. So notice the pushing off or the delaying of these due dates and the filing dates could cause people more problems in some ways, because obviously the tax isn't gone now. So now if you owed anything for 2019 and you're filing on July 15th and you have a tax payment that is due, you're going to go, oh no, I got a tax payment. That's not good. And if you have estimated payments that you need to make for 2020 that got postponed till the same date, July 15th, well, now you got kind of doubled up. You're paying 2019, possibly whatever's due at that point, although it should have been paid, during 2019, but you could have some amount due, and you got everything that's due in 2020 coming up at the same point in time. So that might cause I'm sure it will, some people to be overwhelmed with the amount of payments at that point in time. So what you want to do again is avoid the penalties and interest. If you can't make the payments at that point in time, you want to do the filing and think about either going on extension, which means you still have to make the payment if you go on extension, but at least you avoid the penalty for not filing, and then think about the payment plan options to set up to be in good standing. Back to the text. The two estimated tax payments can be combined into a single payment. The IRS offers several convenient ways to make electronic tax payments. So if you make quarterly tax payments, obviously you made them for January, February, March, first quarter, April, May, June, second quarter, which would be due. The second quarter would normally be due in July, right? So now they postpone the first, and the first and second are now due on July. So if you think about the quarterly payments, then of course you can have one big payment, which is basically the first two quarters possibly, and then the third and fourth quarter payments that you'll be making as of now in a standard type of way, unless any kind of other changes happen. So the tax payment methods, they have a link to that here if you got questions on how to pay the IRS. Just remember when you do pay them, because now you're talking about 2019 may not be filed, you may have tax due for 2019, and then you have estimated tax payments for the first and second quarter, which are combined together for 2020 and whatnot. You want to make sure that you tell the IRS what year to apply your payment to. So figure out which year you're applying your payment to, and then make sure that when you talk to the IRS, you're applying it to that year so you can understand what tax is due. So when you owe taxes, obviously, for multiple years, it could be a little bit confusing when you make the payments as to which year the payment is applying to, and if you get that confused with the IRS, that can cause problems, in the future. So you want to make sure when you fill out the payment that you're applying it to the form, to the proper year or the year that you know that you're applying it to, so that you can track this information. Don't rely on the IRS to do that. Make sure that you're filling out the form properly, have the coupon stub for the proper year, 2019 or 2018, or doing it properly with the electronic tax payment methods. Back to the text. Taxpayers did not need contact the IRS or file any forms to receive this relief. This relief applies to individuals, trusts, estates, corporations, and other non-corporate tax filers. Taxpayers needing more time to file their returns should request an extension. There's a link to request an extension here by July 15th, 2020. So the extension, remember, typically in 2019, the tax returns are typically due by April 15th of the following year, which would have been April of 2020. And then you typically have the ability to file an extension. Remember that the extension does not mean that you don't owe the tax at that point in time, which is a little bit confusing. And just to note, in a perfect world, the tax return that you file should be more of an informational return, kind of like payroll taxes, meaning they want it set up so you pay the taxes during the year. So ideally in 2019, you would have paid your taxes that you owed during the year in 2019. Then when you file the tax return in 2020, it would ideally just say, hey, here's the calculation of my tax liability. Here's the payments I made, exactly equaling the tax liability, and I don't owe you any money. You don't owe me any money. It's just an information return. That's how it would work ideally. But the tax system is too complicated to do that. So the IRS still wants their payment throughout the year, even though it's way too complicated to actually calculate what the tax is until the end of the year when you actually do the tax return. So that's kind of the dilemma here. That's why we always try to shoot for a little bit of a refund, but we still need to pay them as we go. So just keeping that in mind, when you do the extension, that just means that what are you trying to do? You're trying to avoid the penalty related to late filing payments, right? You're not going to avoid the penalty related to late payments because the payments still due. So those two things are going to be different. So the extension should be an easy thing to do. It's typically going to be an easy process. Now the tax return not being due on April is now due on July 15th. The extension process is still the same thing. If you want to extend it to October, then you can do the extension process in a similar fashion as you would if it was due on April 15th for that extension. And it's a similar kind of situation, though. You got to realize that you're avoiding or you're trying to remove the penalties related to late filing, but you still could have penalties related to the late payments. Back to the text. Exceptions may apply for military personnel serving overseas. For example, a Form 7004 application for automatic extension of time to file certain business income tax information and other returns would normally provide an additional 6 months extension until October 15, 2020. However, this year, a Form 7004 filed by July 15, 2020 will extend the time to file by 3 months, not 6. The extended filing deadline is still October 15, 2020. In other words, the IRS extended the normal deadline from April 15th to July 15th, but they didn't extend the due date for the extension. So they kept the extension. If you file the extension, it's still due on October 15th. So it's not like they kicked out the extension due date for another 6 months. They kept it where it's at. So they just basically moved out the normal filing date to July 15th. You file an extension, that's going to kick it out, and we'll be back to normal by that point in time unless they do anything else funny. And that'll mean the extensions will be due on October 15th, 2020 as per the normal situation. Back to the text. The tax filing deadline has been postponed to Wednesday, July 15th, 2020. The IRS is processing tax returns, issuing refunds, and accepting payments. Taxpayers who mailed a tax return will experience a longer wait. So they're telling us that they're really kind of backed up on this mailing of the tax return. So if you're mailing the tax return, it's probably going to be longer. If you're expecting a refund and you want that refund soon, you probably don't want to mail it. You probably want to use the electronic, and you probably want to have some kind of electronic payment of the refund. If you owe money, then mail the return. Maybe, I don't know. Probably may not matter, right? As long as you put it in the mail by the due date. And you should be okay there. But typically, the rule is that you'd like the thing to be processed, so you'd want to electronically file. If for whatever reason you don't care if things processed in any given time, then maybe the mail could have some benefits there. But anyways, there is no need to mail a second tax return or call the IRS. More information can be found below. There's links to the more information here. There'll be links to this in the description.